Welcome, everyone. Welcome on behalf of Founders Forum. We're proud to be co-hosting today with our partners at McKinsey on FF Live sessions. Getting started, I'm pleased to hand you over to Rishi Khosla, who you will all know from seeing the invite is the CEO and co-founder of OakNorth, and also he will be in discussion with Tunde Olanrewaju, who is a senior partner at McKinsey, leader of the European FinTech practice and the UK digital practice. So Tunde, let me hand over to you.
Thank you very much, Brent, and thank you everyone for attending. So I think we'll keep this pretty quick moving. So I'll probably cover three topics just to prime Rishi. We'll talk a little bit about the impact of the crisis on banks and particularly on OakNorth. We'll talk a bit more about what that means, particularly we're seeing people taking advantage of technology to navigate this. And then we'll try and get some advice from you, Rishi, about what people should be thinking about. So I'll just kick us off. I'll give some short facts just to frame. But if I look at what's going on with the crisis, you can see FTSE's down 20-odd%, interest rates at 0.1%. For banks, that's a bit of a big nightmare, right? When you think about that. And when we've updated our forecasts for what we think the industry pools will look like, and obviously it's going to be dominated by lots of risk costs and kind of credit losses. So, Rishi, maybe first question to you. You've been through a crisis like this before. The last time this crisis happened in 2008, interest rates went from 5.5% to 2 and then 0.2 and have never really come back. How did you navigate it? How long might this go on for?
So to state the obvious, no one's been through a crisis like this before. This is a different crisis. And I've so far come across very few people who remember the Spanish flu, clearly age. So I think it's an incredibly different crisis, but I guess your question is, what were the learnings from the previous crisis, right? And for me, it was a lot of what we did in 2008 was really good prep for what we've ended up doing in this crisis. The only thing is we probably ended up accelerating, and the intensity of everything in this crisis has at least gone up by 50%, if not double. And ultimately, it's about very quickly understanding where your downside is, where your weaknesses are, spending a good amount of time up front, really stressing and getting to grips with that, and then fully playing for upside. And that's what we did in 2008. The key difference, and when I say intensity has gone up, I remember in 2008 I was doing an average of 35 to 40 meetings a week. Now I'm up to 80 scheduled Zoom calls a week, and then on top of that you sort of have all the other stuff you need to get done. So it's about focusing and, as I said, sort of playing for the upside, finding the opportunities. I'm very much of the belief that in any crisis there are immense opportunities. So it's about playing to those opportunities. And I think some of the strongest businesses actually get built in crises.
Yeah. So, I mean, that's very helpful. And I think, everybody will be feeling this sort of intensity right now. When you think about the people you're interacting with, how are things moving? Are you seeing shell shock? Are you seeing people kind of moving at the same pace? What's your sense of how people are reacting on the other side?
So almost universally, I'm seeing people so much more focused on making decisions, on getting stuff done in a way that they've never actually been used to. I mean, and even some of the large institutions that we face off against, where we're finding they're breaking rules, they're sort of breaking red tape. It's a very small example, a very large institution in the US where just their vendor onboarding process would usually take 6 months plus. They got it done in 5 days for us. So there's a lot of momentum to get stuff done, and a lot of focus from management, from teams, etc., to take whatever's a priority and make it happen in a way which, go back 3 months ago, just wasn't there. There was so much more inertia in every organization. Now I think people understand that sort of all bets are off in a way, and action is the only thing which is going to keep organizations sort of moving forward.
Yeah. So Rishi, still on the theme of intensity, how do you get your team focused, right? Remote context, you know, people doing homeschooling, right? You know, how do you get people focused, especially in a situation where you're probably having to change direction? Yeah.
So actually, again, I would say that the great thing about a crisis, any crisis, is people. There's a call to action in a way that something has to change. People have to sort of fall into line in a different way. And I would almost say the motivation level across the board at our own organization, with our own team, as well as, like I said, sort of with clients, is so much higher than it's been before. I know from our own stats, actually productivity for even like the development team has gone up materially during this period. And I think that people are working longer. People are sort of very focused on actually getting true results at the moment. So I would say that it's been in a way organic in the way that teams have adapted to actually rallying behind the cause.
So just again on the same theme of the crisis, one of the things we've seen is a dramatic slowdown in funding available to, you know, the ecosystem, right? And, you know, some governments are intervening. You know, the Future Fund in the UK, Germany and France have launched similar funds. We've had many discussions about this. How do you think about that kind of COVID pivot, so to speak, right? You know, we've seen people retrench. We've seen some other people basically launch new propositions. Is that something that you think people should be focused on? Is that something you're focused on?
So look, I mean, I'll give you a slightly convoluted answer here, but relevant. So if you look at the environment which we've been in for the last years, we've been in an environment, especially when you think about a funding environment, of sort of excess funding availability. And therefore, businesses have been able to raise significant amount of cash. And look, clearly we've raised a penny or two as well, right, ourselves, right? But you've been able to raise a very significant amount of cash because there's the supply-demand equation has been, in a way, in the favor of the entrepreneur. If you look at what's happened now, naturally, all investors are sort of retreated and actually saying, what does my existing portfolio look like? Where do I need to support? What do I need to do, etc. And you've gone back to a, let's say, extreme level of capital scarcity. Now, I go back to the comment which I made before in terms of a lot of great businesses come out of crises, and actually one of the reasons is you have scarce capital availability, and because of that, you build in a totally different way. You don't build on the basis that, you know what, I'll raise 5 million, 10 million, 15, 20, 30 million, and I'll experiment here. You sort of don't have that luxury, and it's much more gritty, sort of roll up your sleeves and bootstrap. But in a way, in at least my view, that creates a much healthier organization and a much more robust organization. So I'd sort of say, from a funding perspective, yes, absolutely, but inevitable, because people have to take care of their existing exposures, right? Still, clearly, a lot of, I mean, you know, the whole private funding market is based on, you know, fixed life vehicles. So there's still a lot of spare cash to deploy across them. Are they in a hurry to deploy this month or next month? Clearly not. But will that change over the next 6 to 12 months? Absolutely, right? So there clearly will be funding, but the priority is going to be funding their existing portfolios company. Mm-hmm. But that, in essence, should change the entrepreneur's view of how do I build my business in this more capital scarce environment.
And Rishi, just to push on that, you know, is the kind of focus of, I guess, your proposition, your direction, absolutely the same? And is it about sort of going through it, or are you making some very conscious shifts because of the crisis? And what do you think others should be considering?
Right. So I would say, if you think about what I just said about sort of focus, bootstrapping, acting, I mean, acknowledging you're in a capital scarce environment. I mean, we ourselves have made some decisions to sort of say, we're going to triple down here, and this experiment or what we were doing over here, you know what, we can't afford to do that anymore, right? And can we afford to do it? Of course we can afford to do it. Should we afford to do it? Given the change in environment, we shouldn't afford to do it, right? So we sort of pull back, and it's just intense focus, right? And sort of taking out all the, it's often something which I say, if you've got all of the organization working in a streamline, right, you're going to actually make headway quicker. Every flank you open slows you down. It causes drag, right? So we've been closing the flanks and closing all the experiments and sort of saying, let's just be streamlined. Let's be super focused and actually just run to the goals we have, rather than having these flanks which may shoot off and create things, but ultimately today they cause drag, and actually you can't afford drag.
Very helpful. So Rishi, just to pivot to the core of your business for a second, you're in a unique sort of position of effectively running two engines, right? You've got your bank, right, which is obviously going to be experiencing some of the credit challenges that we've been talking about, and you've got a B2B platform business, which in many respects could be very useful for some of the things people are struggling with in this crisis. As you think about that, is the relative focus still equal? Are there differentiated issues that you're now trying to deal with? The way you're supporting your customers in the bank, are you having to make some of the calls around capital scarcity that you just described that people are going to be forced to make? Some color on that would be great. Yeah.
Sure. So first of all, we've got one business, right? We don't have two businesses. So we've got one business, which is fundamentally our platform, which we've created around servicing what we call the missing middle, credit analysis monitoring, right? We monetize that in two different ways, right? We have our own credit book in the UK through our bank, and then we license the technology out in other markets. What's been super interesting in this period is actually being the really quick learn, incorporate into product, help other clients with what we're learning on our own book. So let me bring that to bear. So you go back to January. In January, we started running scenarios around supply chain disruption. And we sort of said, if you've got integrated supply chains into China, there's a high probability those supply chains are going to get disrupted, which may impact some businesses, et cetera, and looking at that impact. We did that for our own business. We very quickly started doing that for other clients. Then as soon as rumors of lockdown started, and obviously the crisis sort of bumped up here, we started running like a 6-week shutdown scenario. And within like days, we were running a 3-month shutdown scenario. And then like the next week, we were running a 6-month shutdown scenario. And now for certain industries, like certain hospitality, we're running a 9-month shutdown scenario, right? So that's all happened in the process of like whatever it is, 4, 5, 6 weeks, right? And actually being able to take those scenarios and then build them up on a sub-industry basis for our own bank, and then implement that in platform, where today we've got over 120 different subsector scenarios built into the platform, which we then run for other commercial banks, is just that development cycle to learn and incorporate into product and support clients. We wouldn't have even known what to do if we weren't on the front line ourselves. So I would say that it's been incredibly valuable to have both of those monetization models, if I can call it that way,
yeah,
for our single business, the platform.
And just on that, I mean, Rishi, how do you underwrite in this environment, right? I mean,
good question. So there are two things. Number one, almost your whole credit book for any lender today has to be re-underwritten, right? Because any of your historic data, historic analysis, your risk ratings and everything don't hold because fundamentally all previous correlations have been broken, right? How do you underwrite? You have to come up with a view. So I take the example of hospitality, right? Even within hospitality, you take hotels, and even within hotels, you take the difference between a business hotel, a tourist hotel, and a conference-led hotel, right? It's sort of like you have to come up with different scenarios for each of those. And how you underwriting, you're sort of saying, I mean, at least we're saying a conference hotel may not come back for like 18 months or so, right? But we're saying sort of a London-based, New York-based, whatever hotel, right, will probably start coming back sort of late this year, and it'll probably take 9 months or so for it to get back thereafter. So sort of like mid-late 21 to get to the point where it was at 90% of 2019 numbers, right?
Yeah.
That feels conservative. Is it going to be conservative enough? As you get more information, you evolve your scenarios, right? But if you don't have a view and you're not building out those scenarios in that granularity, then you're just putting your finger in the air and sort of saying, you know, I think I should put another 5 million behind this business, right? When actually that may be based on the business reopening in 4 months versus actually a more realistic scenario where it may need 12 million because actually, you know, it's not going to come back to 2019 levels till 2022.
Yeah. So Rishi, this is a good pivot into the whole kind of role of, you know, analytical insight and, you know, kind of modern technology, so to speak, which I think is the core of what your platform is really offering. One of the things we've seen through this crisis is just the sheer growth, frankly, in the digital channel. So many of our banking clients have seen 30, 40, 50% growth in people using the digital channels. They're struggling with a tripling of volume into their call centers. They've also introduced operating models they never thought possible. So they have people doing call center calls from their homes. So it's really challenging how they thought they would run and how much they can actually deal with. And it sounds like quite an opportunity for yourself, frankly, to provide capabilities to help them deal with that. Do you see people embracing this kind of shift in the way they're going to be running themselves going forward? Is that creating a tailwind for you?
So I think it's almost consistent across most banks that we speak to, where they're actually saying what we don't want to do. I mean, I literally had exactly this conversation like 4 or 5 hours ago with an Australian bank, where they said we absolutely do not want to go back to the way that we used to do things. Right? We're very clear that we need to service our clients in a more digital manner. We have to treat actually our whole client base more at a more comparable level, because the other thing they've discovered during this period is that the way they treat different client segments, even within their commercial, even within their business clients, is so dramatically different. And actually there's very little consistency in customer experience if you're a smaller business which is growing and becoming a mid-sized business, becoming a larger business. It's just like they're very hard cliff edges between them. So absolutely, there's a recognition that there's a need to change the way that they're looking at the world and actually doing things on a go-forward basis. And there's a clear intent to then say, how do I bring technology into this to actually ease that path for a new operating model?
Right. And maybe as a follow-on to that, are you seeing, you know, as you say, people are breaking the rules, changing their processes, but is it materially changing your sales cycle, do you think? So for others out there who are in the sort of B2B sales game, you know, getting executive mindshare is exceptionally difficult, you know? What are the sort of tips and tricks that you're finding useful at this time?
I mean, look, ultimately, if it's all about, do you appeal to their priority? If you appeal to their priority at the moment, I mean, we have multiple clients where we're doing daily calls or calls twice a day, right, to actually get things moving. And everyone has a sense of urgency at the moment. So as long as you're in the priority zone, right, I think you've got amazing tailwinds at the moment, right? If you're not in the priority zone, you have to get yourself in the priority zone.
Yeah. I mean, the other thing we're hearing from our clients is a real interest in inorganic action right now, right? So, they're looking at, the funding challenges that people are facing. They're looking at, new technologies like yourself and saying, could I do something more clever, right? We're also hearing this from our fintech community as well, right? You probably can't disclose, but, is any kind of M&A or inorganic action on the agenda, or something that's just not being considered?
So look,
how do you think others should think about this?
So acquiring a business is a massive distraction, right? You're very seldom buying what you think you're buying, right? Actually taking the business, and especially if it's tangential to where you currently are, right, sort of dilutes, again, the focus, right? So if your focus is here, it adds a very big flank, right? If it's directly in line with what you do and you're taking out one of your competitors, right, and you're literally taking it out to bring in your customers and plug them into your proposition, I think that's slightly different. But if you're taking anything which is adjacent, I just feel like, again, my personal view is it's a distraction, right? Unless you feel your core isn't going to get you where you need to be. So that's my initial reaction. Okay. The other side is saying, okay, there may be great opportunities to pick up teams. There may be great opportunity to pick up sort of, certain IP, et cetera, at moderately sensible numbers, right? But then again, that goes to capital allocation, right? Is that the best usage of the capital you have? Because I would say that, going back to one of your previous questions around funding, if you are well funded today, that is such a massive advantage against Absolutely. The market. It gives you staying power to a level which automatically sort of puts you ahead of probably your competition, right? So in a way, do you really want to use that firepower for something tangential rather than something which doubles or triples the speed of where you're going? So the right acquisition may make sense, but things which add flanks, my personal view, slows you down.
Super. So I'm just, one last question. I'm going to pivot to inviting folks to ask their questions. If you're on the receiving end of such interest, right, from, a corporate entity, how should you think about it, particularly if you are very funding challenged, the sort of dreaded down round, is that something you just have to suck it and stay alive, or,
Yeah.
How have you thought about this?
So look, ultimately, you always raise capital when you don't need it, right? And at a time like this, if you're raising capital, primary capital, you're raising it because you need it, right? And there's no hiding from that fact, right? So I'm a practical person, which basically means you need the capital and someone's willing to give it to you, right? Unless you can bootstrap and sort of, change. If you sort of say, how much am I going to lose by going slower, using less capital, and being able to use what I have rather than going externally? That's one sort of decision matrix. If you've decided that you need the capital to be able to continue building or continue to be in business, then I'm sorry, it's sort of like, you have to take what's
you got to take it. Okay, so I'm just going to open up to questions. So,
actually, Tunde, let me just say one thing about that.
Go for it.
The private markets have a massive stigma around down rounds, right? But if you're a public company, that's like saying, hang on, your stock price went down on the, 20th of March, right? So therefore you had a down round. I mean, it's like public stocks go up and down like every single day. At the moment, they like seesaw like crazy, right? Yeah. So the stigma in private markets of down rounds is something which is sort of like, if you actually step back, is very illogical given what you see in the public markets, right? But there is a stigma. Sorry.
No, it's very helpful framing. Okay, so I'm just gonna invite some folks to ask questions. When I call you out, please introduce yourself, say where you're from, and go for it. So if I start with Cesar Aya, I think from Colombia, you had a question around funding instrument. Go for it.
Thanks. Hello, I'm Cesar Raja. I'm an early stage investor based in Colombia, and I'm relocating to the UK, our company. My question was, congratulations on your company. And my question is, if you anticipate any shift towards equity funding rather than the debt-based growth that we were experiencing until now.
For what, mid-sized companies or for?
Yeah, particularly mid-sized.
I mean,
like SMEs.
I mean, look, I would say that actually, especially if you talk about tech, I would say there was significant equity funding, right? Like I said previously, I think there was almost like a oversupply of equity funding for tech businesses, right? If you're talking about traditional mid-sized companies, they have been very reliant on debt, right? And do I think that there's going to be more equity going into those? I mean, theoretically, debt providers are going to have less appetite. They're not going to provide the same leverage levels. Now, does that just take out funding from the market, or does that get replaced with equity? I don't see the sources of equity to replace it, right? So I don't necessarily see sort of the gap or the reduction in debt funding being replaced by equity in traditional mid-sized businesses.
Super. So we're going to call Joe White from California.
Morning, Tunde. Good, thanks. Greetings from sunny California. I'm a venture capital investor across all ranges of tech and deep tech. I was interested in actually your public market expectations and recovery time. I mean, you suggested with hotels that even those that are not focused on conferences may take till the end of the year to recover, and that I'm sure you have further expectations about the economy generally. But it seems that the public markets have priced in a shift to from the offline world to the online world. But have they priced in a massive recession? I'd be interested to hear what you think about that. Are they over optimistic?
So look, I'm not a public market investor. All I can say is the 5 pence that I had in the public markets is no longer in the public markets.
The question, Rishi, is when did you take it away? When it was still 5 pence, or when it was 1.5?
I actually took it away in November.
Oh, nice. Okay.
That's when I took risk off. But it was 5 pence, right? So, you know.
Yeah. I mean, Joe, for what it's worth, we've done a lot of thinking around the different scenarios. And, you know, for those who are interested, we can share it. I think when we've polled a lot of our sort of banking CEO clients, they've come around a consensus, which is what we call a kind of muted recovery. So they expect, as everybody, there's a big dip now, right? Unemployment is probably going to double or triple. The furlough is hiding the real level of unemployment that will play through, depending on how long we're closed for. But then when it comes back, we expect there to be, one, you can't operate at full capacity because many businesses aren't going to be allowed to, just to kind of maintain the social distancing, and customers won't want to consume. And then you might have periodic dips as we kind of have to slow down again, etc. So, you know, that's why I referenced the previous crisis. It's not the same as Rishi said, but, you know, 10 years later, many of the people that the government took stakes in, they still haven't sold down. Interest rates never really recovered. This could go on for quite a while. At least that's where our heads are. Rishi, I don't know what scenarios you have been planning on.
No, I mean, look, again, if you extrapolate from what I think happens in the real economy, right, which is things are somewhat almost low to no activity until sort of later this year, and then take 6 to 9 months at a minimum to get to 90% of previous volumes, right? You sort of can read into that clearly that we're expecting a very slow, very gradual recovery, which doesn't get you back to 2019 levels, as I said, for probably 2-3 years.
Yeah. I mean, you're not in the consumer space, but some of the companies you bank, obviously, you know, sell to consumers. What we've been seeing is a significant slowdown in adoption of many of the new consumer, like fintech propositions, right? Just people aren't onboarding, right? There's really been a flight to safety in a way, and like core businesses. You know, how should people think about that? Is this a temporary thing? I mean, it's only been about a month and a half. Is this something that when you look at your businesses, you've been doing that bifurcation of who has resilient demand, who's, you know, how should they think about this? You know, because you could keep pouring money in acquisition costs, so you could just wait it out.
Right. So if you have a look, especially in the tech space, one of the natures of BDC companies is that many of them still have to find their business model, right? Because you put their overall cost, however they dress it up, of cost of customer acquisition. I never understand how companies can have can be profitable on each customer but still lose money, right? But there are some companies that do that, right? But
Fixed cost.
Again, fixed cost.
Bad allocation of fixed cost.
Well, just accounting tricks, right? Because if you make money on every client or every customer, you should make money as a company, right? But whatever, I'm a traditionalist on these things, right? But when you look at therefore the fact that a lot of these businesses don't make money overall, and they've been the beneficiaries of a strong funding market, as soon as you take away that strong funding market, which is clearly gone, I would say fewer of them survive, right? Because you're not going to get the investors who are willing to take that leap of faith, which they were willing to take in the past. So I do think that there's going to be a shakeout in the BDC space. But saying that, clearly there are some strong businesses in that space as well, right? And they will survive, and they'll probably do extremely well because they'll mop up sort of get the debris which gets left by the ones which go out of business. But broadly, I think there will be a lot of losers in that space.
Great. So there's a question just come in from Karandaway, not Karandaway Limited. I'm sure that's not your name. Maybe you want to introduce yourself and ask Rishi the question.
Yeah, that was lucky and good timing, actually. Hi, Andy Hibbert from Karandaway. Karandaway, I like that.
Sorry.
So we've done a big pivot, and we've launched a business called CarShare, which is the same peer-to-peer car sharing business with a difference. It's simply that we get people to give us cars, and we then give it to frontline workers. So it creates a mass community.
No.
Now, my question really is about the investment required for any business. All of us will need money and time, I think. And I guess your point, Rishi, about the hotel analogy, which is in 18 months' time, potentially an events business hotel might get back on its feet, based on a difference between a leisure one and a business-orientated one. Now, that might be true. So my question is, how do we, if we need money next week, next month, in 3 months, we have to back up a story of the future demand of our products. And I guess we've got 5 weeks of history or 6 weeks of history that no one knows. And you said everything has to be rebased. So how do we build credible stories based on the demand I think for my product or anyone thinks with any degree of credibility? Or is it just the facts we are presented with and how we sell our story, which is how every founder basically starts a business?
I mean, look, it's the latter, right? I mean, you have to have a point of view which you think is believable, then you need to be able to sell it, right? And so it's very much the latter, your ability to sell your story and why, you know, what you're projecting and what you're saying is believable. And like, you know, it's a matter of knocking on as many doors as you can, so you get someone who eventually believes you and is willing to put their money out.
I mean, it's great to hear that, because I think there's a lot of facts that we can build. I mean, for us, for example, there's 48 billion of debt last year given to people who wanted to lease cars. Imagine 20% who can't afford to pay them. There's a lot of cars coming back, and we could say, look, we could help people make money by leasing and sharing. So we're going upstream to get the supply that way. But again, it's just us telling people that's what we're doing and selling that story and believing it ourselves.
You show some early proof, and you know, if you're getting momentum in this time, you can sort of say you've got momentum in the extreme point in the crisis, right? So assuming that you think the next 12, 18, 24 months, you're not going to be back to 2019 levels, and you're going to be somewhere in between the trough of the crisis and 2019, is that an environment where the proposition still holds? And the answer is probably yes, and therefore, whatever.
Yeah, perfect. Thank you.
Yeah, so Brent, you wanted to come in with a question.
Yes, sorry. I was just going to ask how you see... Can you hear me?
Yeah, put your camera on.
All right, I'm in the park.
Okay.
There you go.
Much better.
Much better. You can see the park. So I was going to ask about your critical hires. Who are the most important people you've hired so far? Is it the sort of data scientists, or is it the biz dev guys? And do you see an impact, A, in being able to attract them now that you're so big? Is it harder as a bigger company? And B, with looming Brexit and the UK's attractiveness?
Okay, so first of all, we're not big. We're a scrappy startup, right?
Okay.
We'll always be a scrappy startup, right? I think in terms of, look, the most important people you hire, everyone in the team is incredibly important, right? There are probably 10 plus minus people in the team, which I will interact with every single day on different topics, right? And clearly, as a technology business, the person who your CTO, your CIO, your VP engineering, etc., all critical people. Your product people are critical. So again, sort of it depends on what type of organization, but the handful, the 5-10 people who are the team who are leading the business, clearly are going to be the most important individuals. In terms of ease of hiring, etc., look, we've hired a lot of people from the US and brought them to the UK, especially over the last 12 plus months, right? And that was clearly in the eyes of Brexit, etc. And I think the UK clearly has created a name for itself, a brand around fintech, and people sort of want to be here. The fact of Brexit, etc., I don't think sort of touches the minds very, very strongly of at least I'd say the bulk of the team, because we're sort of on a mission to solve a problem globally rather than solve something purely on our little island here.
Yeah. So Rishi, just to pick up on something. So if I just sort of step us back, and one of the things that we're really noodling with is if you look at what's going to happen to banking profits and you look at what's going to happen to the economy, there's just a lot less money, right, to go around. And it just feels like quite a lot of businesses simply won't make any real revenues, right? It's just there's overcapacity, right? And so, we're sort of looking at how that might shake out. Clearly, there'll be some businesses that will just have to fold, right? But structurally, it doesn't feel like this is a kind of temporary correction. This feels pretty structural. It feels like many of the banks have taken too long to cut costs, and now they really will dig in, right? And similarly, many of the kind of consumer finance, buy now, pay later growth, that credit is pretty bad and isn't going to come back. So do you think we're being too gloomy, right? And how do you position yourself in this reality, right? Do you fold early?
Look, if you're a company on the other side of that reality,
yeah.
From the perspective of the business rather than the perspective of the lender.
Correct.
Yeah, from the perspective of the business, I think you have to be brutally realistic, right? In terms of actually what the scenario could be. And this is super interesting because even if I look at our own lending book in the UK, if you take a particular sector, let's take bars, right? We may have some borrowers who are saying they're going to be open in June, right? And you have other borrowers who are saying we're probably not going to open before Christmas, and we're not even sure if we'll get Christmas trade, right? And you look at that behavior, the borrower who's saying they're going to be open in June is sort of la la land, right? Because that's not going to happen, right? And if you're basing all your plans on sort of everything being normal, right? And you've got sort of half year of normal trading, you aren't facing reality, right? Whereas the business, which is saying, I don't know if I'm going to even have Christmas trading, and I'm going to plan on the basis that I'm not, right? And if you can still survive that, then let's rephrase that. Then you probably stressed your business and created a scenario which is somewhat realistic, somewhat conservative. Mm-hmm. And if clearly trading comes back before, that's upside, right? So what you have to do is then say, okay, what do I think is a bad case scenario? As I say, worst case scenario is everything goes to zero and there's no world left. So there's such thing as a worst case, right? So what do I think is a bad case scenario? And that's why if you think about what I said right up front, you sort of look at a bad case scenario, you prep for that, you understand how you're going to manage that, and you sort of say that's reality. And then everything else you play for upside. So in that example, then it's sort of saying, okay, everything's going to be shut. I'm not going to get any revenue till the end of the year. I need to figure out how I survive till then. And then, is there anything I can do between now and then, right? And maybe bars is a hard one, but you know, if there wasn't a licensing issue, maybe you can start selling alcohol online, right? But you know, and I think a lot of people on the with us today probably have had a drink or two in the last week, right?
Last hours.
Right? But then, so I mean, it's a matter of looking differently. And look, I mean, a borrower like a client of ours like Leon, that's what they've done. They've adapted their stores to actually sell groceries, right? And therefore they've kept, you know, whatever 30, 40 stores open of theirs, when a lot of other stores which provide sort of fast
food,
healthy food, are shut. So it's a matter of, but yet they still planned for actually, if we had to shut everything, what does that look like? And then let's try to be creative.
Yeah. So Rishi, I mean, if you then, you know, for this community, right, you know, the so what is, you know, plan for a deeper trough, take earlier action, right? And then everything is upside in effect. Exactly. What if you do that and you're at the brink, right? I mean, so I don't know, in your previous business, did you guys ever feel that you were very, very close to the edge? How did you navigate that?
All the time. It's a great place to live. I mean, if you're not living close to the edge, you're sort of not going fast enough, right? I mean, look, I'm putting context in my previous business. We used a total of $60,000 to build the whole business, right? So we didn't have capital, we didn't have funding, etc. So that was bootstrapped as extremely as you can do. So you know, if you feel like you're on the edge, again, just know what your decision tree is at any point in time, right? And if you know you can only survive for 3 months, right? Cut everything so you think you can elongate it, right? And yes, is it going to slow you down? Yes, are you going to have to make hard decisions? Yes. But is that the right thing to do? Absolutely. Go to your team and tell your team to take 50% haircuts on salaries, right? It's like, you know, again, my first business, I had no money. I didn't take a salary for 2.5 years, right? So, and I was, as I said, I was living on vapor, right?
Yeah.
And look, that's what entrepreneurs do. If you've got got conviction and you've got enough belief, right?
You got a nice Ferrari now, though, so it kind of works out.
I've got a toy Ferrari, yeah, that's right.
Sorry, that wasn't part of the interview. Chatham House rules, folks.
That has to get cut.
Exactly. But you know, I think, you know, one of the other reflections we've had, so a lot of our banking clients are considering some super drastic moves, right, as they think about coming out of the crisis, right? Because, you know, it's the kind of don't waste a good crisis mentality, right? And at least from where we're sitting, we're not seeing the community show up with that sort of aggressive mindset of how they could really change the game for some of these institutions, right? So, I mean, what's your view on boldness, right? And really taking true risk, you know? So, you know, what are some of the things that you've seen that have inspired you, just to kind of give people some, you know, some stuff to noodle on?
So I think, look, especially, so if you think about, again, the larger institutions, there's a lot of political pressure for them almost not to make sort of, you know, large cuts, etc. Right? Obviously, the government furlough schemes, like you said, sort of mask a lot of what's probably going to unwind.
Yeah.
When you're a small, mid-sized business, look, it's about survival, right? You don't have the funding avenues, you don't have the wherewithal, like I sort of say, if you're in a rubber dinghy at sea and there's a tanker next to you, right, and you hit rough sea, you have to do what you have to do to survive, right? The tanker can make all sorts of choices, right, for you to survival. So you have to go to those human instincts, and I mean, all cards are on the table. There's nothing which should be sacred, and you sort of say you're not willing to relook at. But again, what's key is to understand where you're going with the business, right?
Yeah.
So first, figure out what your downside is, prepare for the downside. Then figure out where the opportunities are that you want to play for. Once you figure out where those opportunities are, everything which doesn't speak to those opportunities should be out of the business, right? Because it's a total distraction and it's just an unnecessary cost, right? Which will slow you down. And then with that focus, you've got a chance of actually then capturing some of those opportunities rather than getting spread on sort of legacy viewpoints, which don't hold today.
Yeah. I mean, maybe as I kind of close, and if there's any final questions, I'll share them in a second. One of the things we're also seeing is there's very, very big, I would say, regional differences. So when we think about our fintech practice, we're getting a lot of inbound interest from Asian and American sort of entities looking for opportunities to pick up here, right? We're also seeing quite a lot of firepower from corporate VC, really interested to do stuff right now because they're in a stronger position, I would say, and in a different position. Any reflections on whether you are seeing any kind of regional differences as you kind of go into the market?
I mean, so yes, but let me just think through this. I mean, except for the obvious is like activity for us in Taiwan, China has come back quicker than clearly where things are in wherever, let's say Austria or the Netherlands, right?
Yeah.
But that's sort of obvious just given where we are on the cycle. I think there's also a level of what's indebtedness levels within corporates, right? And therefore what's the health of their own balance sheets. Ultimately it comes to the same thing. If you're well funded and you're cash rich, it's a good time to go shopping, right? Because as Howard Marks says, when the world's on sale, it's a good time to go and buy.
Yeah. And then what do you think about government support, right, for the community? I think there's quite a lot of folks who are very frustrated at what the eligibility criteria for the future fund, for instance, right? You think that's the sort of thing that the government should be paying more attention to for this community? Or it's just market reality?
So I think the fact, I actually think the government has been massively front-footed here to get programs stood up, operational, and sort of money being filtered into the right parts of the economy is tough. By the fact that they've continually amended criteria, for example, on C-bills and as you say, for the future fund, I actually haven't seen the eligibility criteria for the future fund at the moment. But my guess is that if they don't get it right out of the gate with enough lobbying, they'll move it, right? Because ultimately they actually do want to help. They actually do want to get money into the hands of companies which need it. And the whole idea of the future fund is to make sure that the UK keeps innovation and keeps those businesses sort of running during this period. So my strong viewpoint would be, as a community, if there are issues with eligibility criteria and the like, to actually make sure that we lobby and sort of open the eyes for the government to see where the shortcomings are.
Super. Okay, so as I kind of bring it to a close, let me sort of play back some of the things I'm taking away, right? So look, I think the first thing is, this is obviously an unprecedented crisis, but the sort of dynamics of every crisis is playing out, right? Be quite realistic about how painful this is going to be, face into the tough issues earlier on, right? And then the rest could be potential upside. having said that, it really feels like there's going to be a massive bifurcation. Those that have, dry powder, such as yourselves, can kind of ride this out with more focus. Those that do not are probably going to struggle and will probably have to kind of bite the bullet on down routes, etc., to stay around, if at all, right? But it's going to be a very tough reality. At the same time, there are many opportunities in kind of corporate partnerships, corporate funding, etc. If you can really hit people's priority strike zone, right, and kind of pivot your message to really, really be sharp, right? And there might be a silver bullet coming with the government intervention, but don't bet on it, right?
I think
Is that fair?
I wouldn't call government intervention the silver bullet. I would call it an aiding factor.
An aiding factor, exactly. It's our money anyway. So. Okay, great. Yeah, that was what we had. If anybody else has any more questions, we're going to be producing an article around sort of COVID-19 implications on fintech that we're going to be sharing over the next week or so. And we'd welcome lots and lots of input from the community. So feel free to drop us a line if you've got perspectives. And thank you very much, Rishi.
Thank you so much.